Good morning, traders. It is Thursday, June 4th, 2015. It's 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight tonight, at least in the U.S. overnight. The Shanghai Composite closes at 7-year highs despite the fact that it dropped 5% during the session. Greece has the June 5th IMF payment deadline and it remains in focus. There's a discussion of bundling speculation. Greece is saying they're able to make the 330 million euro payment without a problem. The overall lack of progress is still weighing on the Eurozone equities as fears of default are looming. And overall, that's what's driving the overnight session on the sell side pretty much every day. A dramatic rise in ATM and cash withdrawals in Greece shows fear among citizens there. Now, potential for there to be an inability to withdraw the euros in the case of default. The Bund had failed to breach the 1% yield level. The Bund, as well as the U.S. 10-year, have been on a downslide. If the futures are selling, then the yield is rising. The Bund and the 10-year are bouncing back up today. The Bank of England leaves both interest rates and asset purchases, the asset purchase target unchanged at 0.5% and 375 billion respectively. Former Dallas Fed Fisher says we're beginning to see some wage pressure as the economy improves. And then this morning at 7:30 we got initial jobless claims. It's 276,000 versus 278,000 expected, so slightly better. Continuing claims 2.2 million versus 2.21 million, also slightly better. I want to remind everyone that we roll to September 2015 on U.S. indices next Thursday, a week from now. Remember, U.S. indices roll 6 days before their expiration. Looking at what's ahead for today, we don't have very much on the calendar. We have a ton of speakers, but as far as economic releases, we only have natural gas at 9:30, expecting 118 billion. As far as speakers, we're looking for Fed's Cirillo speaking at a financial conference in New York. Also, OPEC's holding its annual international seminar. And then there are meetings in Europe, EU's Juncker, EU's Moscovici, and IMF's Lagarde discussing the economy. As far as auctions, we're looking for the refunding announcement for 3s, 10s, and 30 years on U.S. Treasuries today. Again, as always, let's switch gears and look at what the market has done. Yesterday, midday, I released a video of what the market did versus what the hypothesis was pre-market. I hope you've watched that. It is available on my YouTube channel, and if you scroll back on my Twitter feed, you'll see a link to it. Yesterday, the expectation was for responsive selling back to 2107.75. Potential for pushing through to 2106.75, taking out the overnight low from yesterday. And then we were looking for chop somewhere in here, somewhere between 11 and the 2105 area. And then we were looking for a rotation up to 2119 for a test there, pull back into the range, more chop, and then the expectation for 2124 and a quarter. What it did is it did exactly as expected on a primary hypo. It traded sideways on the open for a brief period, and then we had a pretty aggressive drive down. You can see it in the delta here, pretty strong trading on the bid. Uh, Closed the naked point of control 2107.75, no problem. We did get our chop, we did get our pop, and then we pushed up to 2119 as expected. We stopped 2 ticks short at first, pulled back, and went through to the upside. As I pointed out in that video, and I'll repeat it here again, the market goes from balance to balance. The market's a mechanism for seeking value constantly. I can't emphasize that enough. The reason the market moves is not because there are HFTs and algos and moving average systems and whatnot. The market moves based on decisions by human beings on what value is likely to be. So yes, there are a bunch of machines that decide, there are a bunch of algos, a bunch of this, a bunch of that, but somebody has to initiate the move, and the algos are not sitting here analyzing value and looking at the inputs that are coming in and making a decision. There's participation on a higher time frame called the OTF, and then everything else ensues. And so what the market did yesterday is a push to 2119, which is a value, which is a prior point of control, which delineates a value area. So you could see that early on it put in, this is what the profile looked like as it reached up here. You could see how it built, it basically recreated the point of control from back in the 2119. Look at this point of control, exactly in line where it was from way back when we had this 2119, which is from back here on the 28th. It recreates it, trades it for a while, and then my warning in the chat room was, watch out, a break below that low volume node at that point, which was at 2116, which happens to be yesterday's high. A break below there is likely to target the IB low, likely to target 2107.50, and a push through 2107.50. I'm expecting 2105, 2101.50 by the end of the session. It could not get there. Participation slowed down, but you can see where the market built a point of control right against the high volume node we left behind on Tuesday, and then when it transferred to a new area, it built a high volume node right where we accepted value in the past. Very methodical, very textbook. It's not usually this clear, but essentially if you replayed the market in high speed, you'll notice this kind of behavior all the time. I used to use IRT, this charting platform, which has a playback feature. I used to replay the day 60 times speed and watch how value develops. This is what this cloud is. This cloud that you see in the back shows me how value is developing, and this pink line shows me where the most traded price is migrating to. And what it did yesterday is it was a beautiful short here, and we were looking for it to break lower, to go neutral, hopefully neutral extreme on the downside. Could not do it. Ended up bouncing back up, which kind of squeezed us out of a trade, but overall it traded well. This worked out very well. It tested above, could not hold on. Once it got through the low volume node, it went right back to the prior point of control, shifted it back down right here, and held on to it for the end of the session. And then overnight, of course, it ended up completing that idea. So if we look at the overnight session, we'll see that despite this strong-ish close, we still ended up being stuck in that day's value, a clear value area, clear consensus on prices down here at 2112, which, by the way, 2112 comes to us from the micro composite point of control. So see this, we drew this yesterday before the session started, and this black line is the most traded price since the 26th, and early on, and that's where we ended up with a high volume node on Tuesday, and that's where we ended up with a point of control in the morning before it went to 21.19 and back down to 21.12 and a quarter. Again, another clear indication of how methodical it is. And then yesterday or overnight, we ended up coming back to that point of control, trading around it for a while. But then when Europe opened, right at the European Open, we had selling. The DAX was very heavy this morning. Some pretty decent selling right off the open. So you can see the European Open here. DAX goes vertical, straight down, approximately 200 points. At 25 euros per point. It's a pretty big move. And you can see here the U.S. markets trading in sympathy and unable to get by and recover some of this. So we're opening just on the edge of yesterday's range. If we do not continue going up into the cash open, we're trading on the edge and below the mid for the session. So the over-under line this morning is going to be 21.10. So the hypothesis for today, we're looking at pretty decent resistance up above. Depending on whether it opens in range or out of range, the expectation is for responsive buying back to 21.12. I'm looking for a test of 21.10, 21.12, and then I'm going to be looking for a chance to get short. If you look at the last few days, we have tended to, when we open and sell off, we've tended to come back up pretty strong. Sell off, come back up pretty strong. And that's how it is. That's how it's been for some time. Sell off, come back pretty strong. Gap, sell off, come back pretty strong. Sell off, come back pretty strong. So we're in the middle and the thick of balance here, and more of that action is expected. So this morning, I'm looking for some sort of responsive buying back into 21.10, 21.12. I'm looking for a chance to sell it back down below for a test of 21.0150. We still have 20.9450 untested from above, and it still remains there. This is complete balance here since the 26th. You can see based on the microcomposite profile, we're stuck in a range here and we're not going anywhere. So let's stretch this out. The point of control here is still 21.1250, and that's the extent of this morning's test expected. But I am looking for responsive buying into the open as the market rebalances. Inventory overnight is short, so I'm looking for that to rebalance a little bit when we open back up. Okay, I'm going to show you a quick glimpse of the 10-year and what it has done. The 10-year played out in a triangle formation. It broke on the upside, which, to be frank, was a surprise to me. The expectation was for it to continue this impulsive move down, and then it finally crossed right through and hit its target, with the key target being 125.22 yesterday. It ended up pushing beyond to the next naked point of control at 125.14 on the 10-year. Pretty decent trade in there yesterday. Pretty good liquidity and movement. This morning it's bouncing back up. Overall, we have what looks like an impulsive move. The expectation, if it does pull back, the expectation is for 125.11 to be taken out again. We're looking for a continuation lower and for it to return to its higher equilibrium price at 124.17 right here, this HVN. So we've cleared the low volume node back here at 125.26, and the normal behavior expected is a retest of the 126 area and then continuation lower to this 124.17 for those who speak in terms of notes. The Bund, I just again want to show you real quick the extent of the movement here. Pretty quick drop in the Bund. Was looking for 150 in there. Yesterday, actually, it pushed to 151.15, which was the target for the day. It pushed to it very, very quickly on the open. And ended up going to the extended target of about 150. The Bund doing the same thing. is pulling back to the next nearest high volume node here, 150, 155, expected to be resistance now, and then we're looking for a continuation lower into 149.50 below that. So the treasuries are all moving in the direction of higher interest rates, higher yields. I'm over my time. It's exactly been 15 minutes, but I want to talk about goal setting and the point of setting goals. I did say on Monday, I did speak briefly on Monday about goal setting, and I know a lot of you want to drop off as you feel like this may not apply to you, but it's just really important to understand that we all have the goal of being consistent in trading. We all have the goal of making money in trading. But that in and of itself is just a vision. I envision that I will be a profitable trader, financially independent, and not having a 9 to 5 job. That's the goal here. And trading, even though it's not suitable for all investors, is an amazing, amazing job when things are working. When things are not working, and every once in a while, no matter how professional, how deep, or how experienced you are, you will experience some terrible periods where you just cannot pull anything out of the market. The market's pulling a lot out of you. This is just part of the process because the markets change more rapidly than we can recognize or cognize that the change has occurred. Our behavior, our change in behavior as human beings lags the market. And so what I want to say about goal setting this morning very briefly is it's great to have a vision, but that's not your goal. Goals are something you set along the way as part of the journey to fulfilling your vision. And goals are going to fail you. You're going to fail achieving your goals. The process is frustrating, but please focus on the journey itself. Focus on what you're doing day in, day out to get to the point where you're building enough emotional capital and confidence and believing in yourself enough to be able to come in on a daily basis as a professional trader and to know that you can do something with the day and that you can be confident in yourself. Through this journey, there are going to be many setbacks. There are going to be losses. Your goal is to minimize those losses, and your goal is to work on some aspect of your trading skill set every single day. So don't set a goal that's big and then just run for it and envision the wealth and the treasure at the end of the rainbow. That's going to disappoint you because the path is not that clear. It is not that linear. The goal here is to say, this is what I envision myself doing. I am a trader. I'm not trying to be a trader. Don't try to be anything. In fact, if you can get rid of the word try in your vocabulary when it comes to trading in all aspects, you would be better off, in my opinion, in my experience, because trying is just allowing room for not really sticking with it. But if you set a goal that this week you will take the setup that you set out to do every single time, win or lose, if you move, we suggest at stage 5, we suggest people test out their ideas on sim, move to the M6C to trade micros, to minimize their losses as they test ideas out, and then move up to the full products once they're confident in what they're doing. But your goal is to just reach the next fork in the road, Every inch counts. All you're trying to do is improve by 1% a week. That's it. In terms of effort, in terms of achieving a goal, in terms of improving your expectancy, in terms of improving your percent win, whatever it is, just aim for small gains over a short period of time. And that's what we're after. Remember, it's not about making money right here, right now. Ultimately, that's the goal. That's known. But it's about just pushing and being one with the journey, and that's what makes it happen, because this is a really, really difficult thing to do. Trading is not easy because you cannot hide behind a cubicle, you cannot hide behind someone else's work, and you cannot fudge your way around your trading plan. In trading, You're looking at a mirror and you're seeing yourself for who you are, and your failures are your own and nobody else's. So it's a lot harder to do, but it is achievable. I've done it with other traders and myself, and it's there. Anyway, I'm hoping this kind of sets you off on the right path and towards your vision of yourself. And I'm hoping that this is all useful to you. Good luck, and I'll catch you tomorrow.